Welcome to Stock Investor IQ's Intrinsic Value Calculator. In this video, we'll guide you through using this powerful tool to estimate the fair value of any stock. With over 25,000 global stocks available, you can analyze companies from markets worldwide. The Intrinsic Value Calculator uses the discounted cash flow method to estimate a stock's fair value. This method forecasts the company's future free cash flows and discounts them back to the present value using a discount rate. The calculator takes your assumptions about revenue growth, net profit margin, and cash conversion ratio to project free cash flows over the next 10 years. To get started, click on the Business Search drop-down menu. Here, you can search for the company you want to analyze. Let's use Alphabet as an example. Simply type Alphabet or Google into the search box and select the company from the list. To estimate the fair value, you need to input your assumptions about the company's future performance. Use the sliders to adjust. Revenue growth, which is the expected annual increase in the company's revenue. Net profit margin, which is the percentage of revenue that remains after subtracting costs. Cash conversion ratio, which is the proportion of net profit converted to free cash flow. Terminal P ratio, which is the expected price-to-earnings ratio at the end of the 10-year forecast period. The historical charts show the company's past performance for revenue growth, net profit margin, and cash conversion ratio. Use these as a reference when setting your assumptions. Remember, past performance doesn't guarantee future results, so be conservative in your estimates. The discount rate is the annual return you expect from your investment. The default is set to 12%, which is generally considered appropriate for most investors. You can adjust this based on your risk tolerance and investment goals. After inputting your assumptions, the fair value section will update with the estimated fair value price. If the current price is below the fair value, the stock may be undervalued. The discount to fair value percentage shows the potential upside. The forecast internal rate of return is the annual return you can expect if your assumptions prove accurate. To ensure your assumptions are reasonable, compare the implied growth rates in the table to the actual historical growth rates shown in the charts below. If the implied growth rates seem significantly different from the historical rates, you may want to review and adjust your assumptions. So there you go. The Intrinsic Value Calculator is a powerful tool for estimating a stock's fair value using the DCF method. By inputting your assumptions about revenue growth, profitability, and cash conversion, you can project future cash flows and discount them to the present value. Always ensure that you conduct thorough research before investing. Happy investing! If you have any questions or feedback, please don't hesitate to reach out using the contact form on our website. Start your value investing journey today at stockinvestoriq.com.